Okay, good morning, good afternoon, good evening, Equis Nations. Joe Monastero here. I'm an agency builder in the Promise Keepers Super Region with Steve Houston. Got some exciting things to go over with you today. Today we're going to work on my income planner spreadsheet, specifically on the agency builder component of the spreadsheet. People have been asking for this for a long time. So I'm finally got around to making a video. I think you guys are going to be excited. So this is a spreadsheet part of my income planner that we work on with each of our agents as they're about to enter the field to plan their business on. And the agency builder side of it is to plan their agency. So it really shows you the impact of personal production, passive production, and real possibilities based on actual closing ratios, average closing ratios, cost of sales, et cetera. So let's jump in. You might want to take some notes. This will be available to you. You give me a thumbs up in the below the video. Subscribe to the channel and request a copy of this. I'll be happy to get a copy out to you. So let's jump to a screen share. Okay, we're here. So let's take a look at the spreadsheet in general. Overall, you see we've got assumptions on the top, including cost of leads, percentage breakdown of each lead you purchase on a monthly basis, the closing ratios, the commission rate up front, the annual policy value, the policy persistent annually, and the number of sales that are made on average by the company per agent. Over on the right-hand side, you can see we talk about the fact that you can only adjust this split, this breakdown, also the number of weekly leads you purchase in this breakdown, and also the total number of agents, active agents you add per month. Another note I want to make is just for reference point, when you see these numbers, about 20% of all policy writers at Equis average over $5,000 in annual premium value written per week. So these are real numbers you're going to see. This is not pipe dreams. If you're a good producer, this is work. So as we always say, this is work. It's not free. We don't give this money away. We don't give this business away. You've got to make it happen. The second section talks about commission promotion basis. If you do any of these breakdowns for 3 consecutive months, you will get promoted automatically. You don't have to do anything. You have to write anything. There's no politics involved. If you do $15,000 a month for 3 months, you're going to get promoted to 90%. This is paid policies, actually issued policies, 90% commission from 7. That's all you have to do. Down below this, you can see I've got 2 years of income we're going to discuss, okay? And on a monthly basis, we show the number of leads you purchase on a month based on the commitment per week that you made. So in this scenario, these can all be changed. We'll do that in a second. I'm showing the necessary leads to purchase to get the breakdown that was above to get to 20 contracts issued per week. I have the premium value that's associated with that. Here's your annual commission at 70%. Here's the advance commission you're going to get, the insurance company's advance 9 months commission. You get the rest on the back end in months 10, 11, and 12. It's back end commission. Here's your weekly lead cost. And of course, I multiply this out to get a monthly lead cost, which gives me a total net personal income, lead cost minus gross personal income. I also take into consideration annual persistence. So you can see that you're not going to have that many cancellations in your first month, but I average that out over the course of the year for every month to be 88%. So this is your income, your net income adjusted for cost of leads and policy persistence. You can see this jumps up dramatically in month 4 because you've done $21,000 in premium for 3 months in a row, and that's going to jump your commission basis up to 100%, and 100% of 21.6 gives you 21.6 instead of 15. So now you're going to jump to a net after persistence of $12,000. This is bank deposits in month 4. So I'm going to show you how you can adjust this spreadsheet to maybe get to some better starting positions. Let's say we want to start with approximately 5. So I'm going to cut this in half. And then I'm going to make this 45 for the following month, leads purchased per week. And then I'm going to make this 55 for the following month, leads purchased per week. And you can see now I'm down to 10 contracts per month, 13 contracts per month, 16 contracts per month, 20. So what that does is it boosts my commission basis because of an average of 10,000 plus for 3 months to 80%. Then I average 14,000 plus per month for 3 months. And then I average 21,000 per month for 3 months. So my income, my commission basis is going to continue to rise. And of course, that means my net deposits is going to continue to rise until I get to that 100% basis, which I've capped myself at is here in this spreadsheet. I've capped myself at 20 policies per month. You don't have to do that. You can put any numbers you want in here. So my weekly cost of leads in the above scenario is $200. And that's going to get me to this number right here. You can see that my cost goes up as the number of sales, the number of leads I purchase goes up. If I were to say that I only wanted to work A leads, I would make this 100% and make these 0, 0, 0. And now I'm back to 100%. And you can see that while my cost of leads went up to $1,500 per week, my total number of sales went up to 32. And that's at 35 leads purchased rather than 68 leads purchased. So I would make this probably 35 going all the way across, or 32, 31 to get myself to 30 contracts issued a month. This might be $1,200. But what I'm doing with A leads is working more efficiently. I'm buying less leads, I'm making less phone calls, I'm closing more appointments, I'm spending more money. So my cost of sales is going to be higher. I'm going to put this back to where it was. You can see that's back to where it was. The numbers are back to where they were. And now you can see what I have for income. The other thing I want to make a point of is what's really important is your cost of sales. Here is what I'm spending on sales each month. I'm spending about 10%, 9% for the year on my business to make these sales. You can see my cost of leads continues to go up, but ultimately it caps at about $400 a week. But I'm netting $10,000 a month. I'm netting $13,000 a month. Okay, so leads purchased up here, appointments to sales, adjusted commission rates, total commission, and then your total net commission after all adjustments. Okay, this is your net. If I spread that out over the course of the year, you can see that at the end of the year, I'm at about $137,000 in net personal income based on this plan. Okay, cool. Now we're going to go down to look at the team, building a team. We're going to say we're going to start building a team. We're going to add one agent per month. We're going to add one active agent per month, one person who actually produces. And because of the company averages, they're going to average 3 policies per month. That's just the way it is. So I'm not going to do any recruiting in the first 2 months, so I get used to the business. And then I'm going to start building my team, and I'm going to add one active agent per month for the rest of the 2 years. You can see what that does in terms of additional team premium value. And here is where my income starts to kick in because I enter an override situation. Here I'm at 70%, there at 70%. Here I'm at 80%, there at 70%. So now I actually have an override basis on my agency. In month 12, you see my overrides are up to $7,000. My net overrides after persistency are here. So I'm adding $6,000 to my income net in month 12 to this number down here, which gets me to $25,000 a month. So this is a really important number right here. What I'm suggesting by adding one agent per month and personally selling 20 policies per month, 5 per week, will get me to $25,000 in monthly average net deposits. Multiply that by 12. That's $300,000 I'm tracking. And it'll show that my total net income for the year went from 137 to 169. So I added about $32,000 in passive income. Okay. Here's where it starts to get interesting. I'm not going to change anything in year 2. Let's go back to 68 across. So this is for people that want to keep personal production up. I'm going to keep doing 5 sales a week, and I'm going to only add one agent per month. There's 2 ways this typically works out. You become an agency builder and you add more agents, active agents per month, and your agents start to add agents building their own agency per month, and your personal production will decrease. That's why you saw 33 up here. I'll put that back in a second. So if you keep up your personal production and you only add 1 per month active agent, here's where your numbers end up. So now at the end of 2 years, I'm going to have 22 monthly active agents. Their premium on a monthly basis is $71,000. My net spread, my passive income on a monthly basis is 19,000. My personal income is up to 27,000 because now I have months 10, 11, and 12 income coming back, and I'm also at 100% commission. So 27,000 plus 19,000 takes me to $46,000 per month in run rate. So I'm at 46,000. You can see here that takes me to about $500,000 in annual income. So if you want to know how to make $500,000 a year, you want to do that in 24 months. This is how you do it, period. This is just a numbers business. This is the law of large numbers. I'm going to make another point. I'm going to go back here and I'm going to take these, I'm going to make this 33, migrate it across the rest of the spreadsheet. And so now what I've done is I've reduced my personal efforts down to 10 policies. In your first 2 years, you don't want to jump out of the production business because you're making 100%. That's very attractive. It doesn't go down once you get to 100. So you're at 100%. You keep making your roughly two sales a week, and that's going to produce a nice net personal income on a monthly basis, including your back end income. So that's attractive. That'll take you down to a run rate of about $400,000. Here's why this is interesting. You can see here is your combined team income. This right here makes you a regional manager. And the regional manager qualifies you for equity bonus. Now, in order to achieve equity bonus, you need to get up to about you're getting bonuses here. You're getting management bonuses here, RM bonuses. But once you get to $200,000 on a monthly APV value, year 3, year 4, you start to get into the equity bonus because you're a regional manager. This makes you a regional manager in months 13, 14, months 15 and 16. Let's say in the second year, we jumped our recruiting because we dropped our production. Yes, we're going to jump our recruiting up to two per month. So this is going to be 12. This is going to be 14. So rather than 1 per month, I've added 2 per month because now I have more time on spending more time on recruiting. What I'm doing is I'm increasing my percentage of passive income. So here you see this hasn't changed. I've got about $13,000 I did because I'm making less sales and I have less back end income. So this is where I'm at. This is more likely where I'm averaging on a personal basis by the end of the second year. But here you can see is my income in passive after the spread. So this jumped dramatically. So now you can see that I'm making twice as much in passive income as I am in personal net income. And I'm back up to $500,000 annual run rate, $40,000 a month, $490,000 in total run rate expectation. So if I could keep that going from that point on, or of course continue to boost it, my income is going to grow. So that is the agency builder. As I said, you're welcome to get a copy of this. Just give me that thumbs up. Any comments or questions, let me know. If you like the spreadsheet, I have lots of these. And I want everybody to have an amazing day. And we will talk again on this channel shortly. Take care. Bye-bye.